There's war going on in this world. A war on freedom.
He's acting outside of his authority by saying you can't put something that you want in your own body. That's your own personal choice, and can't nobody take that from you, you know?
You're one of these taxpayers, and these are all your documents, and this is how we're going to rob you. It's fucked up, man.
It's more war, it's more spending, it's more debt, and it's less freedom.
We don't do that here.
Some people think that you can't be radical and pragmatic.
This is what we need, is a pragmatic radicalism, not moderation. Hardcore radicalism, but smart shit.
It's not sitting in a fucking basement with a bunch of fucking nerds.
You don't know shit, and that's the thing. You have to talk to people who think differently than you.
Like, his focus is not how horrible the government is, it's how wonderful liberty and freedom are.
That's what drives us.
People are coming together more and more and more and more as the government has been failing us.
We're just getting started.
Hello, everybody. Welcome back to the Fight for Liberty show. We have a really awesome show for you guys today. I have a guest coming all the way from across the pond. But before we get into that, I got to tell you guys a little bit about our sponsors. Some of them you should already know about. Nugg of Knowledge is my personal favorite because we sell cannabis. And so if you want to get some premium quality legal cannabis in all 50 states across the country, go to nuggofknowledge.com. You can find flower there. You can find vapes, edibles, all sorts of different things. We have CBD, CBG, and the Delta-8 THC products. So go on over to nuggofknowledge.com. Use promo code F4L and you will get 10% off your first purchase. And you'll also help out both the channel and the network and other libertarians as well. And so definitely go do that. My other great friend, Tom Queter, is running for New York State Senate this year. He ran last year. He's running again this coming year. And we're really excited about the work that he did in his first race. And he's only building on that momentum. So if you want to find out more about Tom Queter, how you can get involved or how you can donate, you can go to tomfor52.com. That link is also in the description if you're on YouTube or Facebook, as well as a donate link. There's also a link to Nugg of Knowledge in the description. So go check all of that stuff out. Help us out. We could use it. But today's guest is the founder of the Valhalla Network and a partner of Professor Richard Werner. I knew I was going to mess that up, even though I know how to pronounce that. Mr. Oliver Studd, welcome to the show.
Hi, David. Thanks for having me.
My pleasure. I'm so mad at myself because I had to correct Stacia the first time she said that word out loud because I'm like, I know German and I know better than that. And then I knew I was going to fuck it up.
No problem. It's not me that you messed up. So
that's true. I mean, Oliver is a lot easier to pronounce. So I usually like to start off with some form of a political testimony question. So I'm curious, when did you realize that the world was going to shit and we needed projects like Valhalla Network and other things that you're working on to kind of steer us back in the right direction?
While I was at university doing my master's, so Richard was my main professor and my supervisor for my dissertation. So a lot of what I was learning was, about credit creation theory. I watched Prince of the Yen documentary on YouTube, which is all about Richard's book, and about how basically the Bank of Japan orchestrated the Japanese recession of the 90s to cause, to bring about structural change. And they could have stopped it at any point. In fact, Richard multiple times told them how to and suggested how to. And that's when he invented QE, quantitative easing. And they ignored it because they wanted to further their power and their own sort of agenda, causing mass suicides and depression. Mm-hmm. So I learned about that during my master's. So I was aware then that things needed to be different. Big banks had too much power. Central banks had way too much power. And effectively, anything you do when you centralize the power, you bring about corruption and you're likely to get something that isn't for the common good.
Sure that.
I personally worked for HSBC myself for a couple of years to get a good sort of founding in banking. I enjoyed my time there. It was a good bank to work for as an employee, but it wasn't focused on small businesses at all, which is the backbone of the economy. And big banks aren't. They tend to ignore small businesses. It's empirically proven. In fact, we do surveys with small businesses, and they tell us the same thing as well. And it's just not. You don't get as much enjoyment and personal satisfaction working for a big bank as you do working for a small bank, small businesses trying to do something for the public good. So after a couple of years working with HSBC, I then joined forces with Richard at Local First. I'm a director at Local First Community Interest Company in Winchester, and working on our first community bank. And going through the process with him and also trying to reach out to other councils in other counties and trying to sort of push this idea of community banking, something that is very successful in Germany and was very successful in the UK 150 years ago. And trying to push this and promote it and get the buy-in from councils, it's very time consuming and you have to do it multiple times, you get multiple stakeholders. And I thought, well, why don't we just do this on a much larger scale where there's not as much red tape and we can have much more of a positive impact across the world and not just in the UK. And that's where the idea of really effectively of Valhalla came about, trying to do something that's more public good and focused on small businesses.
That's awesome. Yeah, it's crazy how most people understand the concept that you just described of small business better versus large centralized business. Like everybody understands that like your corner store is going to have, or your local grocery store is going to have better products and better treatment of their employees, and usually even sometimes better prices than say like a Walmart or something like that. Most people get that, and then when they start talking about banks, all of that goes out the window, and they're like, there's other banks besides Chase and HSBC and Bank of America? I thought those were the only ones. and we just don't try to go for that smaller route the way that a lot of people do in other ways.
Well, in the UK, for example, the big banks, the sort of 5 main high street banks, take up 90% of the UK banking market. They take 90% of the UK deposits, bank deposits. So it's not so much that people are unaware that others are available, but it's also that they're not available because these big banks have been buying up the small banks, merging with them, acquiring them, and swallowing them up to ensure that we don't have a decentralized banking structure that we had 150 years ago in the UK. And this centralization has been happening since then, and there's been nothing to stop it. There's no protection there, which is what we've brought in for our community bank, where it can't be sold. It can never be acquired by a big bank because we've got a certain governance framework in place. And now that these are starting to sort of come about, then marketing it and making sure you really have the buy-in from the local trade associations is really important, so that businesses know that we're there to help them and focused on them. But at the moment, it just isn't. They aren't available in the UK, and we need to do more work reaching out to councils and promoting this idea and showing that sustainably and 10, 20 years time, this has much better impact and a great impact on tax, great impact on small business employment and general economic growth in the local area than not doing it and just sticking with the big banks, which mostly care about profits. And mostly care about siphoning money out of the UK, well, sending it to London, to the city of London, and then in some cases overseas to where the shareholders are, and not benefiting the local area at all.
So tell me a little bit about that governance system that you mentioned for Community First that allows it to kind of have that protection from getting bought out.
Yeah, sure. So we've brought in the first ever governance framework for a community bank that, like I said, stops it, prevents it ever from being sold to a big bank, ever from being merged, ever from being swallowed up. The reason for this is because if you have shareholders involved, obviously they're going to want to sell if a good price is put on the table. And if a small community bank comes along, that's not so much threatening the big banks, but obviously if there's many of them, then it starts threatening the big banks. In the case of people are going to be depositing more money with the small community banks. Obviously, the big businesses that they always want is still there because the community banks don't focus on them. But these big banks look at the community banks that are coming along and saying, well, they're doing very well, they're very successful. However, we want to dominate this market and we really only want to be the ones in it. So we want to buy them. A shareholder will see a very attractive offer on the table. The big banks have a lot of money, way over a fair market price, and they will sell. Why wouldn't you? If it's there, you're being offered, it's very difficult to not. And especially when you're dealing with councils, publicly owned banks or government-owned banks, where you've got an interest of public money on the table, and you have to consider what is in the best interest of public money at this time. And if it's a very attractive offer, it's very difficult for Section 151 officers, those in charge of ensuring public good use of public funds, to not decide to sell their shares. So therefore, this framework we brought in is said, right, 50% of a community bank in terms of voting power is always with a charity foundation. And that charity foundation can never vote to sell. It can never vote to sell any of its shares, meaning no big bank will want to even try to purchase it, because it can never get the controlling power of the community bank. It can never change what the ethos of it is, how it operates. It can never just swallow it up. And that 50% model also means that the dividends that the bank makes, the profits, because although it's operating on a not-for-profit basis, the banks themselves are still profitable. And the profits that are generated, 50% of those are then also sent to the charity foundation that then uses it on behalf of the bank to fund local sport initiatives, societies, clubs, charities, social programs are in the area. So you're not only benefiting the economy by lending to small businesses, but any profit in an ethical way, but any profits you do end up making, a portion of those are then used to then regenerate the local area. So yeah, that's how we protect the small banks from ever being taken over.
That's awesome. I also really love the fact that it's tied into that charity and just doing good things for the community. It's not just built around the bank itself being good for the community, but it's actively built in a way that spreads that goodness. That's awesome.
While I've been at Local First, actually, and I've been talking to Richard, there's a lot we want to do, and only limited amount of time we can do it in. And I've been, obviously you're aware, I've been talking to our friends about this as well, trying to move this along. But we want to set up financial education as well, and which means the community banks will engage with local schools, sort of engaging with the young adult age group there, and trying to teach them about financial education, pointing them into resources available through the Local First portal, which teaches them about important things that they need to learn that they don't learn in school, like budgeting, mortgages, payday loans, risks of them, etc. But also, if you form that relationship with the school and the young adults there, those young adults which are going to go on and eventually start up small businesses in the area, who are they most likely going to then approach in the first place to bank with? It's going to be that community bank, which you've had that relationship with, and that is there for you. So that's something else we want to start up as well in the sort of longer term, once our workload decreases slightly.
Yeah, that's something that's really important, because I know the majority of my generation is quite clueless on most financial everything. I'm very lucky. I was raised by my mom has a degree in accounting and was a little obnoxious, in my personal opinion, on like I knew how to balance a checkbook in like third grade, and actually like had my own checkbook like register, even though I didn't have checks or a checking account. Like I was budgeting and like taking track of the $4 that I spent on candy at the dollar store and this and that, and like balancing a checkbook basically as like an elementary school kid. So I'm definitely in the minority of my generation when I like actually kind of know this stuff, and I'm still bad at it a lot of times. Like my budget has been all over the place, especially doing a lot of volunteer work lately. Income is kind of hit or miss over the last 2 years, and so even me getting like that indoctrination and brainwashing into like financial stability, I still didn't catch it all, and so I feel very, very sad for the kids who didn't get any of that.
I really even talk about my mom's financial literacy.
I really like what you were talking about with the schools, though, because actually when I was a junior in high school, my mom went back to work and for a credit union, and they a couple of years ago actually opened a branch inside of the local high school. And so there's like this, it was basically like a portion of the cafeteria, and it was open like during all of the lunch periods, and it was run by students. There was always like one adult there at all times, but there was like always two students in there, like as the tellers. All the kids in the high school got like fee free and like completely free accounts, and like it was awesome. And like my mom would go there like once a week or twice a week to be the adult in the in that branch, and then she would go there every once in a while to like teach a little class or something like that about financial literacy. And like they saw a huge membership increase after that, because the kids would go and tell their parents, and then the parents would become members, and it was one of the best programs that they did as a credit union, which is like the closest thing that we have in the US to breaking up the big bank monopolies is like local credit unions, and even those are still most often corrupted. And
well, the US is doing much better than the UK, I think, in terms of concentration. But yeah, improvements always be made.
For sure.
And it's difficult, you know, you are sometimes battling the regulators on it because they're regulating the banks, and some of their regulations are really more directed towards the big banks and their fees, etc. And if you're a smaller bank, and it's a little bit, you know, sometimes a bit of a struggle to either afford the fees or to go through the regulatory process, which is quite, you know, obviously rigorous and everything. But for a small bank, it's a bit tougher. Yeah, no, that's really interesting, and it's not a bad idea either to potentially bring in the UK. Once we set that up, but it's fun. The most fun part will be in about 4 or 5 years, once the charity foundation starts receiving those dividends that can then allocate them towards social sport clubs, etc. Because what the plan isn't just say, well, here's a check to a big charity, there you go. We're not going to do that. It's going to be much more. Community banks are aware of clubs in the areas, etc., and the trustees will be looking at small local clubs or societies or anything like that, which it can see where the money's going to be used, and it's actually going to impact the local area, and not just pay salaries to a big charity, you know, deputy head or head of the charity, directors, etc.
Yeah, I thought it was really funny. You mentioned in that meeting week ago or so that you were saying like, we're gonna do this in Europe, and then maybe like Africa and Asia, and then maybe we'll get to the US, because the regulations are so ridiculous that we just it's like bottom of the totem pole for right now, and I don't blame you for that.
We'll have to have people on board which is much more aware of the US regulations than I am, for sure, as they're sometimes difficult to navigate. But yeah,
they are a headache for sure.
But that's the aiming for the stars. Aim for the stars, hit the moon. If we aim to, you know, set these community banks up across the world, then maybe we can at least do it in one continent or two. We'll see how we go. But it's, you know, it's exponential growth, because as you start up, you can hire more people and just keep starting up more and more banks and engaging in local areas. And you can copy and paste the model in a lot of times.
Right. And so you've mentioned that you're working with like local councils to start these up, right? And that's like a local government system, right? Which I know a lot of my viewers are gonna like be like, government-owned bank, that's worse. But I'll say, just because I do know a little bit about the UK's structure versus ours, that government system is significantly less corrupted than, say, like the Providence or like national governments, or even like our local governments here, because even on a county level in the US, it's entirely corrupt and BS, and no one even trusts that level of government. At least none of the people that would be watching this show. But so tell me a little bit about like that process of working with the councils and how you're able to get them going on this.
Yeah, so generally what we found is that most councils are receptive to it, especially the one we've just started working with. You know, they're very supportive of what we're trying to do. Some of them are involved in small businesses themselves. But it is funny when you start speaking to these small businesses and you mention the council tool, some of them do, you know, get back a little bit like, oh, if the council's involved, then it sounds it can't be good, you know, or anything like that. A lot of, you know, you still have distrust there. But I genuinely think what the councils are trying to do is a good thing. But the difference between a normal business being owned by a council or government than a bank being owned is that the ownership and the actual shareholder, they don't have as much power as a normal business, because the regulators need to know who's actually in charge of a bank, who's going to be making the decisions. And if it's not the people who are the SMFs, the senior management functions, who they've interviewed, then you're not going to get a bank license. So the framework has to be built there, and the governance framework and the you know, reserved matters between the different boards, they have to be there in a way that regulators can see that it's going to be run in a way that the bankers are going to, you know, they decide how it's going to be run based on the underlying principles and the ethos. But you can't have someone come in and say, no, we're going to ruin everything. Now, of course, they can put it down because an owner can just decide, we need to, we're going to pull some money out, or we need to withdraw some money. But it still has to be in a way where it's not going to damage the local economy. So it's very different to a normal business. So really, if a government is getting involved in and putting up the equity for this small community bank, as long as the ethos is right and what the small bank is trying to do, and people can see that, then it doesn't matter who really is actually the owner. And then, in fact, anyone who's owning it is doing a good job because they're the one who's putting up that important equity to get it started, and then helping the local area.
Yeah, and I feel like if my local, even with the distrust that I have for my county executives, if they said that they were going to try to do something like this, that would earn them a lot of credit in my mind. Like I feel like if you're part of the like super evil, corrupt part of government, you're probably not really going to be on board with something like this, and they should weed themselves out.
Yeah, that's true. They shouldn't be wanting to do that if they're not in it for the public good. But no, we generally found that it's more. I guess with councils, it's more visibility, whether or not they're aware of what we're doing, and trying to do and how it impacts the local economy, and they can see it. But there's a lot of red tape. Obviously, it's time consuming to go through the councils and have to go through the process. But once we start engaging with them, most of the time we find that there's very positive engagement with. They're very interested in what we're trying to do, and they're happy to give us the time of day to give it a try. At least talk further with them. Which for a council, getting that conversation going and actually having them not just say no is really big step, and takes quite a lot.
All right, so tell me a little bit more about Valhalla specifically, and how you switched over to that and what you guys are doing there.
Yeah, of course. So someone said to me the other day, "What is crypto?" Or they didn't think what we were doing is exactly crypto, and I just sort of think, well, what is it then? Like for me, it's trying to decentralize something, trying to do something that's more transparent, more open, more public good, but the key part is decentralizing control, especially in the DAO. That's to me what we're trying to do, and if that isn't crypto, then I apologize, because that's what we're trying to do. But effectively, we're going to democratize finance through Valhalla Network by owning and establishing these banks, these community banks, under the DAO. These, like I said, they're not for profit, but they're still profitable. So these cash flow, the real world cash flow that comes through and flows to the DAO, the governance token holders will then be able to vote on how those funds are used. Is it going to be airdrops? Is it going to be reinvested? Is it going to be scholarship opportunities started up, a sort of university style structure started up? Also, where are we going to try and then target next for community banks, whether or not members want to get involved and say, look, I want one in my area. I'm going to do a load of work on this. Here's the initial sort of workload that you need done. And they can earn for doing that. And they can actually get involved. So that's what we're effectively doing, is we're saying, right, we know that decentralizing banking is really vital. We know that these small banks help economies and help small businesses. So now let's not only decentralize banking on a larger scale, but let's democratize the actual ownership structure as well. So the average person from any country can be a governance holder and be, access those very attractive central bank credit lines. But normally the average person can't access those lines. And by being a governance holder, you have access to them, and you have some say in what happens to the profits that come into the DAO entity.
That's awesome. I really love the part that you mentioned there about like putting in the work and then getting to earn some of the coin, because I feel like there are very few ways that people can earn an income of any kind while trying to do these kinds of things. If you're going to your town board meetings to try to argue for something good, it very rarely ends up in a paycheck of any kind. So this is cool that you also have a little bit of a financial incentive to go out and be that person that makes the first move.
Yeah, so that won't be what the DAO is built on so much. We don't need the community to do it, because effectively once we issue tokens, we've got money there to set up a bank. To set up a community bank. The DAO will be then tasked with dealing with the external companies and consultants to bring about the start of that bank, to bring it into fruition. We're experienced at doing that. Richard and I are experienced at doing that. We do it in the UK, and we have partner companies already that we work with, which we have very good relationships with, which can give us informal advice and also help with setting up certain, like IT, for example. So we don't need people to do it. It's just another thing. If they want to do, if they say, look, I really want one in my area, so I'm going to do all the work, like the feasibility study, if you like, of saying, is one needed here? What's the market like here? We can provide a template of what we need before we can even approach, the regulators in that area and start going through the process, because we need to make sure that it's not going to be a waste of our time and the DAO's resources. And then people can do that work. Then the governance token holders can vote on it, whether or not they can review it themselves and vote on whether or not to even submit it to the external consultants who will then review it. And if it then passes and we go through and the DAO says, the governance token holders say, yeah, we want it to go through. We want the DAO to set up a bank in that area based on that feasibility study that someone's put in. And then the bank starts up. The person who's done all that work will then earn either tokens or, we haven't, this is still not fleshed out yet. This is still way in the future, and it's just like a light bulb idea that we had a few months ago, but it's still not, decided on exactly how they'll get the rewards, but they will get some sort of reward for doing that work. But that's like extra. It's extra stuff that we're thinking for governance token holders, and we're still fleshing out tokenomics and everything at the moment. It's version 0.8 that we're on the white paper, still very early days. And if anyone has any feedback on it, we're always open to suggestions and stuff. But yeah,
there is a link to that in the description, guys, both to the Valhalla site and also the white paper that he just mentioned. If you want to read it, that's in the description.
Awesome. But yeah, so Richard, he's the figurehead for this. He's the sort of project chair, if you like, Professor Werner. He's going to be heavily involved on the banking side as well, obviously, of setting up these banks and making sure, overseeing effectively the executive team, if you like, the senior contributors of the DAO, making sure that we're bringing about in the right way, we're building it so that it has longevity and sustainability, so that when the governance token holders come in and say, right, we're going to run it as the token holders, that it's all set up in a way to do that. Richard is the ultimate overseer, but it's myself, and then I have a fantastic group of people I'm working with who know their stuff. They have a lot of experience, especially a couple of them. They have a lot of experience in DAOs and in sort of the IT space anyway, and in the DLT space as well. One of them has been a CFO on another project. The other one has been in DAOs for about 4 or 5 years, which makes him sort of one of the most experienced in the industry. So we have these fantastic guys on the team, which I have full confidence in that they're going to be able to bring the tech solution, which, I'm not a techie myself. I'm still learning it. I'm still, I'm a banker. And, I've got absolute faith in these guys that they can bring that into fruition and build this so that it has longevity.
That's awesome. So how did you go from a student of Professor Werner to now like a partner that's working on all this awesome stuff with him?
Yeah, so funnily enough, I was the only British student in the class that Richard was teaching. And I asked him a lot of questions. I was always challenging him on his theory, making sure, is this guy just talking rubbish or does he actually understand it? What about in this situation? Does your theory hold up? Is that actually accurate? And I was doing a lot of background reading at the time. So I had a lot of fun there in that course, got to into Richard, sort of explain about how, Profit Research Center, which Richard set up many years ago as well, to provide financial advice. We've now decided to set that up, and we're in the process of setting that up as well to provide retail, affordable financial advice. So there's loads of things I'm involved with Richard now. But yeah, we just got talking and we decided that, at some point in the future, it'd be good to work closely together, try to do this sort of public good. And, Richard and I have a lot of trust in each other. He's a very close friend of mine. So I was discussing this with another gentleman as well earlier in the year. And I spoke to Richard and said, look, this is the idea. What do you think? And he was very much like, look, go, yeah, happy. Sounds good. Sounds good. Don't really understand it yet. He wasn't 100% in the blockchain space as well. But yeah, let's continue on it. Sounds great. White paper come through. Richard's been heavily involved in writing that, certain sections of the white paper as well. He's been joining team calls, actively contributing, and he's aware of now of how exactly it's going to work. And it's very exciting. So that's how we sort of moved into Valhalla.
That's awesome. I feel like one of the things that I try to talk about a lot on this show is kind of how people go from I'd really like to solve this problem to actually solving the problem, because so many people, including myself, just sit around and, this is awful. This company has really bad business practices. I wish there was another company that would compete with them. I wish that there was this or that. I wish somebody better would run for office. But we all just kind of, no one really wants to rock the boat. We all just want to kind of stick in it with our lives and do the thing and get a normal job and buy a house and white picket fence and everything. And a lot of times doing something like this challenges that original like mindset of life and makes you kind of shift your priorities. And it's always interesting to me to hear how that process goes through.
Well, financial stability, where's the fun in that, hey? So, Richard has been challenging the main structure, the central planners for many years. He's had a hard time at it. These people don't like being challenged a lot of the time. And he's been a sort of prominent figurehead of trying to do community banking in the UK. He's been working on the community bank framework and the governance framework, ensuring it can't be taken over for many years, and making sure the regulators approve it. And that's been a challenge, but now they're happy with the framework that we built. So Richard has been sort of really challenging it and pushing it and deciding. Look, he's been calling out CBDCs for a long time. That's central bank digital currencies. A few years ago, he was saying that they're going to be coming around. They're going to create a Soviet-style banking system, which they are, and we need to stand up against them. The big banks need to stand up against them as well, because they're a threat to the big banks. This is one of the sort of biggest threats to our time, along with all the tyranny that's happening across the world, and restrictions are in place. But the actual central planners and what they're doing with CBDCs and how that will be linked to, for example, maybe your health pass. So, if you haven't been jabbed, you can't access your currencies in your account, which will sit at the central bank. Something like that. That is extremely scary. And, he's been talking about that for a few years. It's now coming around more. It's more obvious that they're trying to do it in a few years' time. So it's really important now more than ever that we need to decentralize the banking system as much as possible, make more people aware of what's happening. Because you can't have a Soviet-style banking system that works for the economy. You just can't, because it means you've got one bank with all the deposits. That one bank can't do the job of lending out to small businesses. It can't even do the job of lending out to big businesses, because you need to have people on the ground getting to know these businesses, trusting them. They trust the bank that they work with, and knowing, okay, they're going through a tough time at the moment. We can understand why. We can give them flexible repayment schedules. That's what community banks do. They're there for the community. So yeah, Rich has been doing that for a long time, and I'm quite young still. I'm in my 20s. I don't need to worry too much yet. If things go wrong or something, I can fall back and do something later in life. It's better now when I'm younger to take the risk and say, I don't want a salary for the rest of my life. I don't want to, just sit in a comfortable job, because that doesn't have a good impact on society, and it's not fun.
Right.
It really isn't. And I don't, going to protests and everything, that's all well and fun as well, enjoyable. But this is really, if we can do this right, which I think we can. I know the banking guys can do it right. I'm not trying to be big-headed. I know I'm on the banking side, but Richard, he knows what he's doing. He's been doing it for many years, so he knows exactly how to orchestrate this, how to build the banks out, how to do the phase 1 and then phase 2. And I've got absolute faith in the tech guys as well. So there's no reason we can't do this. And when we do it, it's going to revolutionize the banking system, and it will really put more, give more power to the people who are behind it, supporting it, and make a real change.
Mm-hmm. Yeah, I couldn't agree more with the 20s are the best time to do this. I remember I quit my job at 21 to run for office, and then since then I've been working in politics and traveling and like working on various either nonprofits or campaigns. And when I first quit my job, I was working for a company called World Business Lenders. They were founded by one of the founders of Deutsche Bank. They're partnered with Axos Bank. Like they're fairly decent company. We were doing like small business, like asset-based loans. It was a good job. It was one of the most secure jobs I've ever had. It was like actually like salary plus commission instead of just commission. And so many people, both like from work and my friend group down in the city where I was, and then even like my friends back home and my parents' friends, like everyone was like, what are you doing? Like, what? You're just like traveling and you have no income, and like you don't have any roots and any friends, and it's this whole crazy thing. I'm like, I'm 22 years old. This is the time when I'm supposed to be going around fucking up my financial life, and then I can fix it when I get older. Or maybe this turns into something that actually fixes it by itself. which it seemed like might be a possibility a couple of times throughout this path. And yeah, like this is what you have 20-year-olds for, is to take the risks and do the crazy shit, because 60-year-olds are not going to do it most of the time.
Yeah, you're right with that. But it's just, it's important. It needs to be done. It needs to be done by someone. We're trying to do it on a small scale in the UK, and we just need to do it large scale, and we can democratize it by actually offering it to governance token holders and do it in quite a cool way. Very, modern. It's not been done before. We're learning as we go. We will have to learn as we go. I'm sure we'll make mistakes, and we'll learn from them and build on them, as any new sort of startup does, and especially when it's in a new world. The Web3, if you like. But yeah, it's in the German model works very well. The community banking model in Germany, which was originally the UK model as well. They've got 1,500 small local banks, Sparkassen, which lend to small businesses in their area. They have their headquarters in that area, and they're very successful. In the last financial crisis, which was 14 or so years ago now, not one of these small banks required taxpayer help, required bailing out at all.
Wow.
Of course, a few of them struggled at times, but they helped each other. They came together and helped each other. But they don't do any risky lending. They don't do any risky business. They don't do derivatives at all, nothing like that. And they only lend for small businesses that they know really well. And those small businesses during a tough time really need the help as well. They need to be engaged with a bank and working with them. So the actual model itself is so robust. It's been proven, tested and proven in many economies. It's robust, and we're using that model. So we're not sort of scared about, the actual model itself not working, the business model not working, phase one bank as well, that's proprietary, but we're also not worried about that model. It's actually very conservative, and that's to, support the DAO in the early years, while we then set up the phase two community banks. So yeah, there's no reason we can't do it.
Hell yeah.
Just dream and make it happen.
Yeah, I love it. Yeah, and I'm also like a really big fan of this project, because the banking monopolies are, I say the word monopoly because it's basically that. I know that there is technically competition and there's multiple banks, but it's a monopoly, right? It's such a drastic issue that a lot of people either don't realize or aren't really that engaged in. Like I mentioned earlier, I feel like a lot of people kind of separate that decentralization good mentality away from finance, because they think that like the bigger the bank, the more stable it is, and so the better it is to have your money there, or some kind of logic like that. And one of the problems I have most with like my friends and the liberty movement in general is that it's always like government bad, government bad, government bad, when there's quite a few other things that, like, government's still bad most of the time, but like also big banks bad, also like gigantic corporations like Amazon and Walmart are bad. Like there's a lot of issues, and a lot of times it's actually like the big banks and big businesses that are influencing the government to do the bad thing instead of vice versa.
Yeah, the government isn't controlling the country at all. I think quite a few people are waking up to that now. They're just puppets on a string, really. They're doing as they're told. A lot of people with a lot of money are the ones controlling what happens in each country, and lobbying for it, and funding the government. So you're right on that. But in terms of the idea around the big banks more stable, it's just ridiculous. Small businesses are very creditworthy, in fact. You get over collateralized, the business much better, you're much closer to them, you're much closer to the collateral that you've got. So actually, they're quite good to lend to, and you've got a small bank that isn't doing any risky lending. And in a time where things go, really south, all of those risky positions that the big banks have suddenly blow up in their face, and they're suddenly mounting with loads of bad debts and really like heavy losses. And that's when they need the help. They need taxpayer bailout, or they need to do some shoddy stuff like, breaking the rule around lending to someone to then reinvest in the bank, which boosts your capital for capital adequacy rules. Some banks did that as well, not to mention any names, of course. But they did that in the financial crisis, which sometimes the regulators turn their face away from. Sometimes they looked and said, no, you can't do that, and fined them for it. But big banks try and do that, and they need the help. Small banks, they don't. They can work together. If there's a few struggling, they can help each other out, but they're not doing anything that should I say should, cause them any problems if the economy does turn south a little bit.
Right. Yeah, and even those fines are, I feel like how do you find someone that's doing, like, they're doing the wrong thing because they're broke? Fines don't help that. Like, they clearly all you're doing is encouraging them to do more shoddy things to try to make up that fine money on top of what they're already losing on the bad investments.
Yeah. So fines won't, they don't work. What you need is what Japan was using before, and they did it during a recession as well. And in fact, that's how they caused a recession, something called window guidance, or macroprudential regulations, if you like, in Europe, which is when the central bank effectively tells the big banks and the commercial banks exactly how much they can lend to each sector. And in Japan, it worked very well. And it's how they got miracle double-digit GDP growth. Is the Bank of Japan, effectively, they actually had a window. That's why it's called window guidance. A representative of a bank would walk up, and Richard goes into this in much better detail than I will during, in his documentary and in his book. But these bankers would walk up and they'd be told, okay, this is your ranking compared to other banks. So this is how much you can give out in loans. And if the banks didn't meet that quota, they would fall down the ranking. So therefore, they would want to meet that quota and they'd do everything they can to meet their quota. But if they go over it, then they won't get such a nice quota next time. They'll go down the ranking. So, and you can't go against the central bank at the end of the day, because then they can impose certain restrictions on you, on the banks themselves, and you don't want to start annoying the central bank and just doing something that they say you shouldn't be doing. So you need to listen to them. You need to do as you're told. That's what you do to control the bank and to make sure that you don't have bank crises. Is you get them, the bankers, and you say, look, we're not just going to give you a leash to do whatever you want, because if you do that, they'll do everything they can to make as much money as they can. If you say, oh, you can do whatever you want, make as much as you want, they'll do that. And if that's risky lending, then so be it. That's what they'll be doing. But if you say to them, no, you can't do that. You can't lend for financial speculation. So for anyone unaware, Professor Werner proved that, well, his quantity theory of credit, if you like, that hasn't yet been disproven, that shows that credit is created by the banks, and it's either created for real purposes, like the real economy, which is good, or it's created for bad purposes like financial speculation or going into the asset market, which causes asset bubbles. So if the central bank uses their window guidance techniques to say to the banks, look, this is how much credit you can lend to each sector, they can control the ratio between the real credit creation and the financial credit creation. And then you don't get the bank crisis. So these bank crises are usually orchestrated by the central bank, or it's just caused and they've ignored it. And then when you have a bank crisis, it's actually very easy to get out of one as well. A recession is very quick to get out of if it's done correctly. But normally the regulators will then tighten up and then say, oh, you've got to even protect yourselves more. You can't lend as much out now. And the banks will all come in and say, oh, we don't want to lend. We've not got much. So we don't want to do any lending at all now because it's too risky. So the businesses, the good businesses, the real economy that really needs that credit isn't getting it, because the banks then either can't loan because of regulations like Basel regulations, or they just don't want to lend. So you really need to be on top of them and making sure they do as you're told. They do as they're told, and not just finding them.
Yeah, I mean that's basically the entire reason that my old company could exist, because we were doing like very high risk, high interest type loans to small businesses that couldn't get loans from a normal business. Pretty much everyone, almost every client that I had the entire time I was in finance had applied for a loan from, say, Chase Bank previously to coming and talking to me, and either they needed the money faster because that process is between 2 and 4 months long usually, or they got turned down because they needed the business owners need 650, 700 credit score or higher, and the business needs to be doing like 6 figures a year or more, and a lot of like small restaurants and stuff like that just don't have that. And like a lot of the times my clients were people who, like, their fryer broke in the back of their restaurant and they need to buy a new one. That's a $7,000 piece of equipment. Yeah, like if they wait 3 months to get the Chase loan for that, they don't have French fries for the next 3 months. It's just not a reality that they can live through. And so, there's a lot of shitty business practices in the industry that I was in. There's a lot of, especially because most salespeople are like explicitly commission based, and so the more loans, the more money, and it's not really any skin off of their back. It's not like if they default, as long as it's past a certain time period. If they default, it doesn't hurt the salesman at all. But I actually used to make all of my clients like write out a return on investment for the money that we were going to give them. Like I needed them to detail out to me how the money that I was going to give them would make them more money than they would end up paying back to me in the end. And I would tell them to not take the loan if they couldn't do that. And a bunch of times they would go take a similar loan from a different salesman who is willing to do the shitty thing. But I'm also very proud to say that I've only had 2 defaults in my entire career, and one of them was a deal that I
2 loans
out. Yeah, and one of them was a deal that I barely even worked on. It was somebody else's who quit, and then it just got put onto my desk, and all I did, it was a 10-minute phone call, and I closed the deal. Like I was just like the last nail in the coffin of that deal. I didn't know anything of what was going on, and I just pulled the trigger and closed the deal. And then they didn't even make their first payment. Like they defaulted in 2 weeks. But yeah, and then I had one other like actually legitimate default where the guy's business went under, and like I was really sad. But of the couple hundred loans that I gave out, 2 defaults is pretty good record. And especially when the industry average is about 30%, it's a lot better.
Yeah. So it's funny because this is one of the great things about Valhalla Network as well, because normally a crypto project, if you like, it's high risk or high return. And high going into an escrow that we don't touch. It's there purely for equity purposes. The whole business model has to go through the regulators. We have to have the bankers in charge interviewed, make sure that they are capable of pulling it off. It goes through a very rigorous process to make sure that we're not going to fail and we're not going to go bust. At least that's what they're supposed to be doing, the regulators. And then we model, we go to regulators and say, look, the businesses we're focusing on are going to have maybe an LGD, a default rate, let's say below 3% or something, or below 2%. And that's probably conservative. And then say, but out of that, the LGD is going to be very low because we're over collateralized. So that's loss given default is going to be quite low. So you go to them with this model, they review everything you've done, they review your business model, everything you looked at, your market demand, etc. If they don't think that you can do it, or they don't think that you're telling the truth, or that you're going to fail, they won't give you the license. They won't give you that bank license. So the bank licenses that we're getting, they carry a lot of power with them and a lot of responsibility. And that is what Valhalla is all about: is getting all these bank licenses going with the banks, which have all that power to then create money for the for the public good and for the small businesses. But yeah, it's a cool one. It's a cool one.
Yeah, I'm very excited about this. I think you make very good points about how much better business practices are if you actually know the people that you're dealing with, and I feel like that's an across the board kind of rule that we're basically the whole theme of this show has been just decentralization, and I personally believe that the many areas of centralization that we've seen, whether that's again like Amazon and Walmart, or even just like other silly industries that you wouldn't think would get monopolized, like gas stations and things like that. Like I traveling across the country, I've been into plenty of towns where there's literally a monopoly on gas station. Like there's only 7-Elevens in this whole town or something like that. And it's just a weird concept. And again, you don't know the owner of 7-Eleven. No one, like obviously some people do, but no one knows the owners of these major, huge corporations. The owners don't actually know their customers, and therefore don't actually care about their feelings or their lives in any way, shape, or form. And when you don't know the people that you're dealing with, you have so much less of an incentive to do the right thing.
Yep. And talking about that, so in a normal business, the owners are the ones making the business practices and saying what they're going to be doing, the rates they're charging, etc. In our case, Valhalla Network can be the owner, but because we're a bank, we're not the ones making the decisions. It's the local bankers in the area who are managing the bank. They're the ones who know the businesses in the area. They're the ones who decide on the the rates that they're charging, the rates that they're getting out on the loans, etc. They're offering on deposits. They're the ones who do all that. Valhalla Network doesn't, because one, we're not allowed to by regulators. We're not allowed to get involved in all that. But two, you wouldn't want us to be, because then you don't know the people who are making all those decisions. Then you take away, okay, yes, we have a decentralized governance framework, but you don't want to decentralize the governance framework of a bank so much, because then you don't know all those people that you're working with. You don't know the businesses in the area, and you can't possibly manage a bank like that. You have to have local bankers in the area that can visit the small businesses that they're lending to. They can get to know them, and then they can do ethical practices to make sure that those businesses are supported.
Yeah, 100%. And, we talk about this a lot, at least on the show and in the movement, as far as government goes, of, a large... I say a lot that there's no way that any one person can make the correct decisions for 330 million people. Like, no person is going to actually be a good American president. Like, it's just not possible. Which is why I support disbanding the federal government and plenty of other anarchist things. But yeah, I'm of the opinion that the more that we just decentralize the stuff that we're actually involved in, because let's be real, the government actually influences a very small percentage of your life. It's mostly your employer, the people that you do business with, your bank, your school, that kind of stuff.
Now they impact it more.
Right. I mean, yeah. Now I literally got kicked out of a Subway sandwiches the other day because I didn't have a mask with me. I'm like,
I almost got thrown off a train earlier in the week for not having a mask. So, I feel the pain. People react very oddly now compared to 5 years ago. But yeah, governments definitely impact your life more now than they should. It should be a healthy balance, like you said, where it's your employer, your school, your children, your parents, etc. They all impact. But now it's heavily the government, which is scary.
Well, we could even, back to the point you made a few minutes ago, we could even say that the stuff that we're thinking about right now when it comes to like the COVID regime and other things like that mostly wasn't the government's idea, and probably influenced more heavily by big pharma and big banking and some of these other large business structures. At least, sorry, what was that?
I was just going to say, to mention them, but not go into too much detail.
Yeah, they're that'd be a whole other episode.
Exactly. Yeah.
I would very much love to. I've been trying to stay mostly off of that topic from any kind of like a legitimate scientific basis, because I'm not a scientist. So I'll never say don't take the vaccine, it's dangerous. Please don't remove my video, YouTube. That was sarcasm. So like I've never said that on the show, and I obviously won't also encourage people to take it. Like, I'm not a doctor, but I would really love to finally, now that I think a lot more of the science is settled, I'll put that in air quotes, I would love to actually get into it a little bit more, because we have a lot of information on it.
Yeah, Joe Rogan has some good guests on which discuss it, and he openly criticizes a lot of what's going on. And luckily, he's so large and such a good following that it's very difficult to cancel Joe Rogan and to just simply mute him. Luckily, he's that big, and he's doing the right thing of getting these people on and then really questioning the narrative, which is it's good, and I'm a big supporter of him. But yeah, it's important to to really highlight that what we're doing is one bank doesn't influence another bank. So although the ownership might be the same, and then the ownership is decentralized, we're democratizing finance, we're giving the average person, in a completely different country, access to these central bank credit lines. And we're giving them, the opportunity to decide what happens to the cash flow that comes in, and where does Valhalla Network move to? Where do we focus on? And, do we do stuff in the DAO as well, like charitable stuff? Because obviously every bank is partly owned as well. We haven't decided exactly yet on the percentages for phase 2, but it's going to be partly owned by the charity foundation as well. So in all those banks that we set up, we can reinvest in the local area. But perhaps the DAO will want to do something as well that's very heavy charity focused. So not only are we doing that, we've got the same sort of ownership, if you like, ownership structure for each bank. Bank A can't influence Bank B, apart from the interbank market. But the CEO of one bank doesn't make the decisions for the other bank, and they just make it for their area, their one bank, and that's the decentralized banking approach.
Man, I had a question, and then you kept talking, and I was listening, and the question slipped out the back of my head. Oh, I remember. How do you feel about some of these completely online banks that have been starting up? I've looked into a few of those which just don't have brick and mortars, which ends up being able to drop their overhead cost a lot and kind of be a lot less fee heavy.
Yep.
What do you feel about those?
They aren't supporting the businesses. They're not supporting small businesses that they need to be supported. We did a recent survey of over 100 participants, small business owners in the local, like in the area that we were looking at, gave their answers. And what we found is that the majority want face-to-face traditional banking, which requires brick and mortar. You need to have some sort of headquarters that the customer can come into. They can see the same sort of people. They see familiar faces. If they need to complain, they know how to complain. If they need to sit down and talk through with someone how to do an application, for example, they can do that, and it's a friendly space that they can do instead of just having to call up a helpline and just go, A, B, T, 1, 2, 3, etc., and just go through a note. And I was actually doing that earlier with Lloyd's, and I just went in circles, and it was very frustrating. And or doing it online, where some people won't really be, proficient with their computer or know exactly how to do it. And the live chat function and all that's still very new, and not everyone is comfortable with it. So being able to have a brick and mortar available in the area is really important for those businesses, because a lot of small business owners, they're not interested in doing everything online. And in fact, it's funny that over 90% of the participants of our survey would strongly consider switching to a community bank if it was to set up. That's how much they really want a new bank that is our structure coming into the area. Because it's just, like 60%, over 60% say that they really struggle to get any financing from their current provider. So they do need a local bank with headquarters for that face-to-face banking, for them to come in and say what they need. We can understand it, and then we can offer them solutions that will help them most and help them grow. And then through that, you grow the economy. The council's happy, they get more tax, and they get higher employment, because obviously, well, I say obviously, I shouldn't say obviously, but small businesses are the biggest employer as well. So in the UK, I think it's like 2/3 or 80% of people are employed by small businesses. So you do need to fund them, whereas with big banks, they aren't. So you need those small businesses small banks to lend to small businesses so that they can grow. And then per £1 or $1 lent to a small business, the impact on employment and job growth is much larger than if you gave the same loan to a big business. So therefore, you should be focusing on those loans to small businesses, because it doesn't require as much to get that job growth.
Yeah, 100% agreed. I actually, I tried to go through the process, because I'll say that I'm a fan of the online only idea, because mostly just the fees. That's the thing that pisses me off more than anything else. Like I've said, my finances have been kind of hit or miss. So the idea of like a $35 overdraft fee because I accidentally spent $1 too much, and it didn't decline correctly because the tip from last night didn't come out of my account yet, or whatever reason. But I tried to go through the process of setting up an account with Axos Bank, mostly because I already kind of sort of knew what they were, because they were a partner of my old company, and I never actually got an account, because it was just like emailing back and forth for a little while, and they needed paperwork that I didn't know what they were asking for, and I sent them a bunch of paperwork, and then they were like, nope, we still need paperwork, and they were basically asking for what I thought that I had already given them. And then I went on a job and was gone for about a month and a half, and kind of forgot that this was a thing that I was working on, and the application timed out. Like I would have to like start back from scratch if I wanted to, and I just didn't. I was like, never mind, I'll work on this later. I have other stuff to do right now. And it just kind of fizzled, and I didn't ever actually open an account because of exactly what you were talking about. Like, I feel like I'm 24. I turn 25 next week. I'm pretty proficient with online stuff and like using my phone and app-based technology. And even I couldn't do it right. So I couldn't imagine like some of the clients that I used to work with, these like 65-year-old, 70-year-old like owners of trucking companies or small restaurants or something like that. they struggled with just emailing me while we were still on the phone with each other. So I couldn't imagine them trying to go through this process just entirely online.
I agree.
100%.
I think how much easier it would have been and much time saver if it probably would have been 2 trips maximum. First one to the bank for you to sit down and discuss how you're opening the bank account, what paperwork you need to provide. And then the second time, you can ask for questions of exactly what paperwork do you mean? I don't understand you. And you can get that answer. And then the second trip is you bring everything with you and you can actually do it. It's a lot easier. And if you haven't got that option, you are going to, you're going to provide a lower quality of service to those small businesses, and they're not you don't have the same trust there. Like I said about how small businesses and the small banks, they need to know each other, they need to trust each other. If you don't have that local sort of brick and mortar there for customers to come in and actually see you and you to get to know them, it's really difficult to be able to offer them the solutions that they actually need. You can just see on the screen and say, okay, well, this solution might work for you. Do you need an overdraft or whatever? But unless you sit down and you can start back and forth asking them questions and really getting into detail and getting to know their business, that's the only way you can actually make sure that the solutions you're offering are the ones that they most need.
Definitely. I personally, I do still have a singular normal bank account, or it's with a credit union, not a bank. But I've actually been operating the majority of my finances for about almost 4 years now, off of Cash App. Because a few years back they partnered with Sutton Bank, and so now there's actually an account attached to your account that you can has an account number and a routing number, so I can get my direct deposit sent to my Cash App. I can I have the actual card. Actually, I'm a fan of this one because it glows in the dark and it has a flame on it and it's fun. And so basically everything that I would need for a personal bank, I can do through Cash App. But yeah, especially when you start getting into business banking, is a whole other animal that I don't even think Cash App touches, and I don't think they ever would want to, because
it's not. You have to. This is another thing about community banks: is if you get community bankers to run them, they know how to manage these small businesses. They know how to get close to them. They know how to properly ensure that the collateral that they're valuing and that they've got on the system is correct. They've dealt with these businesses before. They know how to offer you solutions. You can't just take a big business banker and stick it in a small bank and say, please, can you do small business banking? It just doesn't work. So yeah, you do also need the expertise there to make sure. And Germany is a especially hot spot for that because they've been doing it for many years and they've been doing it very well. And obviously Richard is from Germany, so Werner, he's obviously from Germany as well, so he's very familiar with it, which is why he's trying to implement it in the UK, and now we're trying to implement it on a much larger scale.
Nice. So while you guys are building this up, what can other people do to either prepare themselves for when this launches, or help get it off the ground, or just be more financially literate, or help spread that part of your mission? How can people help?
So it's quite difficult. In the local first mission, it's a smaller mission. In terms of helping that, we need sort of connections into councils and really getting involved in that aspect, and making sure you support the community banking initiative, really support it, and you want it in the area, and trying to get the mission sort of visible to your local either MPs or your councillors. That's the key thing for local first. In terms of Valhalla, that is, we just need to go through the fundraising rounds and get everything set up. We've got a pre-sale in the next few weeks, which is it's a discounted pre-sale before the private raise. That's the first round that we're doing, which is 600k, and then the private raise of 20 million in 4 rounds of 5 million. So that will start in sort of Q1 2022, and then after that, pretty much it's banking and tech roadmaps running alongside each other, and it's not until we get to the public raise where things will really kick into gear and start speeding up as well. But yeah, so it's a little bit trickier when it comes to helping on Valhalla. It's more with the raising, as you can imagine with any sort of startup. It's getting that money in the door and then being able to approach regulators. because you need a large amount of money to approach the regulators to be able to say, look, most of that's not even being touched. It's in an escrow account. We're not touching it. We're not burning it. It's just for the equity purposes. And then the regulators take you seriously and they can say, okay, you've got the money, but you need to start the bank up. Let's have a look at what you're actually doing. Let's have a look at your bank license application, which is hundreds and hundreds and hundreds of pages of work. And, that's what we've done. We know how to do it. But yeah, so that's sort of the two main ways to help out if anyone's interested, or get involved if anyone's interested.
Awesome. And of course, helping people, educate people on financial literacy is always a good mission. Because to go back to almost the first conversation, like I really can't believe how much that got stripped out of our education system. And at this point, I might be too much of a conspiracy theorist, but I tend to believe that was on purpose, because I can't think of any logical reason why something simple like banking and accounting would be taken out of a high school curriculum when it was there for so long. Like my parents learned how to balance a budget and a checkbook in school, and most people my age don't even know what a checkbook is. Or they think that balancing it would be like trying to do that with the actual physical checkbook or something.
Yeah, in terms of the education side, it's something that I really want to get around to in the first quarter of next year as well. Maybe going into the second quarter. Obviously, I was in a call with you the other day, and discussing with our friends who have experience in sort of teaching finance and who have a interest in promoting financial education as well, and more real world education materials. So it's really, if anyone wants to get involved in that, then it would have to just be contact me, and feel free to discuss it. And if you want to sort of do anything to get involved, please do. But it's not going to be something really on my agenda until at least sort of March, April time next year, just because of the amount of work I've got on at the moment.
Yeah. I mean, you can't solve all the problems, Ollie. You gotta pick a couple, and then that's one of the struggles that I've been having, is kind of like picking the problems that I actually want to get involved in, because there's a lot of them, and for quite some time I was kind of in a broad, either just campaigning or something like that. So I get to kind of touch a lot of different things, but I'm starting to lose faith in electoralism as a whole. And so I'm trying to get more into a more direct route to helping people. And there's just, I could spend the entire rest of my life trying to end the war on drugs in America and probably still die with some of them still criminalized. Or I could spend my entire life trying to, help feed homeless people, and there would still be homeless people starving by the time I'm done. So yeah, trying to pick exactly the things that I care the most about is the struggle that I'm going through right now. That's the mission for 22, is touch a bunch of those things and figure out which one I feel the most strongly about, because there are a lot of problems to fix.
And if you can solve the problem in one area and it's replicable in others, that's where it gets fun. So the financial education piece, it's you do it once right, and although you might have to update it time and time again, you can then bring it in every area. Every community bank can offer it. So any solution like that is always good as well. Once you've done it right once, it can be used over and over again.
But
when you have to do it, when it's a lot of work and you're doing it over and over again, but from the start, that's where it can be very difficult for you. Sure. And we won't even get talking about war on drugs, because although it's a very interesting one, it will take us over time, as I'd love to have that debate with you and find out what your views are. I can understand your views and just discuss that and how it will work. Because I've got my views on it, and they're in between, and it would be great to chat with you more about that and find out what your views are and how it would go around that. But that's one for another time, I'm sure.
For sure. I would love to have that conversation. I agree that the trying to find something that's the most replicable has been kind of on my mind. And the decentralization of education is another kind of big thing that I care about, because so many of my friends got caught up in the like you have to go to college and get a degree thing, and now they have $150,000 of debt and a useless degree, and they probably could have learned everything that they know now by YouTube videos.
A lot of courses are like that, I can imagine. Yeah, I think you're right. And in fact, Polygon are doing a very interesting piece on a decentralized university. So like a DAO university, which is interesting. And in fact, we're talking about it and approaching Richard for that as well. So I'm aware Polygon have launched something like that, or are looking to really, get that going for a decentralized education piece. And it's something that maybe Valhalla will look at in the future as well, depending on what the governance holders, token holders want to do. I've got my sort of thought process of every sort of public good thing we can do and all the reforms that we can try and do and lobbying and all that, and all great missions. But at the end of the day, I won't be the one making the decisions. It'll be the governance token holders and then voting on it and deciding where Valhalla, moves in the future. We can give it the stepping stones and we can sort of build it up so it's ready to go and the structure's there and it's got sustainability and it's not going to crash, and we've got good governance. So as you'll see, the governance framework for Valhalla, it's actually very similar like to a bank governance. It's heavily got a lot of committees involved. There's a lot of transparency. There's a lot of people making decisions to get it up and running and to get it, successful. But then it's not going to be for me. It's the governance token holders. I'll be still obviously involved and I'll be overseeing and everything, but I'm not going to be the one making all the decisions.
That was actually going to be basically my last question for you, is how, because I feel like it's rare and extremely kind of a noble mindset to be in, of building something like this that you're then going to hand off control of, and that going in that you're going to do all of this work, and then maybe the governance token holders don't care about any of the things that you care about, and all the money goes into other awesome things for sure, but like not the thing that you maybe wanted. How's that mindset?
So with DAOs, obviously, when you set up a DAO, your mindset is you are building something that's going to be decentralized and decentralized ownership of the DAO. That's what you want. So if you don't want that, you shouldn't be building a DAO in the first place. But it's, you don't lose all control. You have a big responsibility. People see you, you're still the CEO, if you like, of it. You're still sort of senior contributor of it. You've still got a very important responsibility and role, and making sure that what the governance token holders want, you deliver. And you take their interests and you make sure their interests are kept to the heart of the project. So you've still got a big responsibility. You're just not one making the decisions. And if you like, that's actually sort of like a relief. It's a weight off your shoulders because you're not the one having to make all the decisions. It's a voting process. It's democratic, if you like. But there's always fail-safe. So what can't happen is one big bank wants to buy up everything, all the tokens, and then just shut down the whole network. That can't happen. There's always going to be fail-safe, so that no one person can just destroy everything that we've built over like a 10-year period, if you like, when we've got maybe 1,000 banks in the network, and the market cap is, I don't know, 100 billion or something, because we've got that many banks, or whatever. Not one person can come in and just buy everything and then say, right, let's shut everything down, or it won't be possible. We'll build that in to make sure that the token holders, or at least the project, is protected for the long term.
That makes sense. Yeah, I can relate with the relief part. I think decision fatigue is a real thing that a lot of people aren't aware of just, when you're in that kind of like a CEO role, and or even, for me on like as a campaign manager and things like that, it's like so many tiny little decisions you have to make throughout the day. And it's too much. Like I was joking with my parents the other night of like, that's why most CEOs are subs sexually, because it's just like, nope, like somebody else make all the decisions for the next X amount of time. Like I just want to check out and be told what to do, because I don't want to make any more decisions tonight.
Yeah, that's the beauty of DAOs, I guess, is that that's taken off you. Now, of course, it takes a few years. It's going to be a few years so the Treasury is protected for a multi-sig to start with, where I think it's 7 or 8 signatures, and we'll have to have like 5 of them or 6 of them. I can't remember. I'll have to check the white paper and how we've laid it out. But to sign it off, so that funds can't just be moved from the DAO's account to Oliver Studd's personal account, to protect it like that and protect the token holders, is going to be a multi-sig. But over time, that also, and that carries a lot of responsibility as well, because you've got to make sure you're there, you're able to sign stuff off so that the government token holders, their dreams can happen. But over time, we'll eventually move that and migrate it to the government's token holders as well, so that they control the treasury and their votes can control the treasury as well. We just got to make sure we do that in a slow and steady way so that everyone's protected and things don't go wrong. If you try and rush it, things will go wrong. So luckily we've got a nice long roadmap, especially on the tech side, because the banking stuff, it takes a while to get going. We've got to approach the regulators. We've got to make sure we do everything right. So the tech roadmap is nice and long so that, the guys can look over everything multiple times, can really think about it and make sure, take suggestions on board and do things in a correct way.
Yeah. I'm really excited to see how this all unfolds and how this works. I think you guys are tackling one of the biggest problems we're facing as a global society right now, and that's really exciting. But before we wrap up, tell people how they can find you, find out more about Valhalla or Community First or Professor Werner or all the other things.
So Richard has a Twitter as well. So it's Scientific Econ or Professor Werner. Either of them will eventually take you to him. Our local first is, you just search local first. It's local-first, I think, .org is the address. But that's just reach out to myself for anything local first related is always good. And then Valhalla is valhallanetwork.io. So everything that we're trying to do is on there at the moment. The landing page, the team information, the white paper is available on there for anyone to check out. And then I can be contacted either on Telegram, I think it's the Stud Maestro, or on Twitter at Stud Oliver. And then obviously Valhalla DAO has its own sort of official page that we use for announcements.
Awesome.
But I'm always happy. We've got a YouTube channel as well, Werner Economics, and my contact details are on there as well, my local first one. So anyone who ever wants to get in touch, either to have a chat, to discuss what we're up to, and to offer any help and want to get involved, always happy to meet new people and talk.
Awesome. And who wouldn't want to get involved with a stud like you? I had to make the joke at least once in the episode.
I've been wondering that for a long time. For years I've been wondering that.
Well, Oliver, thank you so much for coming on. This was really awesome.
No, I appreciate it. Thanks for your time, David. All the best. Have a good rest of your evening.
Yeah, you as well. Guys, thank you so much for watching. Definitely go follow Oliver and Valhalla and keep in touch and follow this, because like I said, I think this is going to be really awesome. We'll be back here tomorrow night at the normal time, 9 p.m. with Olivia Rondow. Thanks for watching, guys. Oliver, cheers. Thanks again.
Cheers.
Right.
Shut up and sit down.